What's happening, my fellow stock market freaks? It's your boy Kevin. Welcome back to the channel. In today's video, we're going to be talking about the top stocks to invest in for 2022. After we saw an incredible year in the market in 2021, and the touchdown trades community saw impressive returns last year, we're kind of in a weird spot heading in to the new year, right? We have growth stocks trading at cheaper valuations than we've seen them in a long time, while tech and large caps, financials, pretty much anything besides growth stocks are really expensive, still trading up near all-time highs. So it's kind of hard to figure out where this market is at. The Fed's starting to ration it down, raise interest rates, clearing off their balance sheet. So you kind of got to put the Rubik's Cube together and figure out what's happening, but that's what we're going to be doing in today's video. And I have three banger stocks that I think are going to have impressive returns in 2022. Let's break it down. Let's get it. Everybody is calling for market crash. Market crash. You see all these big financial stock market YouTubers calling for crash, saying that they're selling out. And that is a mistake in my opinion. Sure, there needs to be some reallocation of your portfolio. Don't just hold stocks that you're up 200-300% on from last year. You need to sell those, take profit, and reallocate those funds into stocks that aren't trading near all-time highs. That's just my opinion. Remember, I'm way too stupid to be a financial advisor. But if we look at the S&P 500, the SPY chart here, we're trading way above pre-Rona highs. Look at these pre-Rona highs on the SPYs back near 345. We sold off during the Rona, boom, and broke out of the pre-Rona highs as the Fed was injecting money like they were Arnold Schwarzenegger injecting steroids, preparing for a weightlifting competition. Those steroids worked, and we saw incredible levels that we have never seen in all of the markets. The NASDAQ tech stocks, the Dow, and the SPY, they saw all-time highs in 2021. However, this little sell-off right here is what everybody's crying about. We're still trading up near all-time highs, but the Fed has investors puckering up their sphincter, tightening up their belt, preparing for the worst. And I agree that the Fed raising rates, the Fed clearing their balance sheet, the Fed slowing down the purchase of assets will impact the market. But there's still some really good deals out there, and there's still going to be some monster home runs in the stock market during 2022. And in my opinion, these three stocks are indeed home runs. All right, number one, stock numero uno, we got the old Googmeister, Google. And yes, I know that it's still trading up near all-time highs. I know it's trading for around $3,000 per share, $2,900 per share. And you may be saying to yourself, Kevin, you dickhead, I don't have $3,000 per share to buy Google stock. Well, here's why I think it is a really good investment in 2022. And here's how you can get some exposure to Google if you don't have $3,000 per share to throw at it. All right. So number one, we got the big stock split coming up. They announced that they have authorized a big stock split for 2022. A big 20-for-1 stock split is coming. Before the Alphabet rebranded in 2015, Google effectively split its stock with the introduction of a third class of shares. You have Google, G-O-O-G-L, and you have Goog, G-O-O-G. So they're the same company, and it's just a different way to get exposure to Google stock. Alphabet stock has doubled in less than 2 years, and the new split would make it more affordable for more people. Why does a stock split matter? It shouldn't matter, and it doesn't matter from a fundamental perspective, right? The company's the same. The valuation should, in theory, stay the same, but that's not the way it works. History repeats itself, and we have seen this happen before. We've seen it happen before with Tesla stock, and we've seen it happen before with Apple stock. Both of those stocks saw monster moves after the stock split. Now, granted, the overall direction of the market during that time was heading higher. However, it made the stock cheaper for your average retail trader who didn't have thousands of dollars per share to invest in the stock market. We know that in order for a stock to go up, there needs to be buying pressure. There needs to be demand. When you see a stock split, it increases demand because the buying pressure it's more available for your retail trader. More people are buying it, the stock goes up. That's just the way market dynamic works. So Google is trading at a valuation right now of almost $2 trillion, right? $1.9 trillion is its valuation. And sure, it seems pricey, but they have their dirty little fingers in everybody's piggy bank. Think about Google, the search engine. Advertisement, SEO, that's a huge business on its own. Then you have YouTube, huge business from the ad standpoint there. Then you have YouTube TV. They're taking over the streaming side of things, huge business, monster business that Google is. And I'm sure they're getting involved in the metaverse and all that. Google is something that I want to have exposure in because you know that they're going to be in the cutting edge of everything. They've got their fingers in everything. So Google, if we go back and look at the chart, let's talk about how you can get exposure to it, even though you don't want to be spending $3,000 per share. And the first way, the easiest way, is fractional shares. Webull, the broker that I am currently using, offers fractional shares. So if you want to buy 1/10 of a share of Google, you can do so. If you want to get some free money from Webull, there is a link in the description, and you can get up to $3,000 in free money if you sign up with my link. Everybody loves free money. All right, so you can get fractional shares. Wait for the anticipation of the stock split. I do think that's going to be a catalyst. We've already seen it act as a catalyst, but I do think you get a pre-anticipatory run-up prior to the stock split. All right, so also, you can go into the options chain, buy some call options, and attack Google that way as well. A much cheaper route to get exposure to this Google stock split. Now, this is not a longer term investment for me. I do think it sees a really good run in 2022 prior to the stock split. This is more of a shorter term trade. I think it has a maybe 15-20% upside. If you attack it via call options, you can turn that 20% upside in the underlying stock into maybe a 60 to 100% upside in some at-the-money call options expiring maybe mid-2022. So I do think we break out, see new all-time highs post-stock split. All right, so let's move on to stock numero dos. Stock numero 2, we got ticker NNDM. This is the penny stock that we're going to be breaking down in the video, the only penny stock. Nano Dimensions, I already bought this stock last week. I did a video solely on Nano Dimensions. If you want to see that video where I go in depth into Nano Dimensions, I'll put a card up above and you can click that and watch that video right meow. All right, Nano Dimensions is a 3D printing company that is owned by ARK Invest and Kathy Woods in their ARK-Q fund. It has been beaten down like a rabid dog. It's been beaten down like the Buffalo Bills were beaten down by the Kansas City Chiefs with 13 seconds to go in that playoff game. It's a tragedy. But Josh Allen and the Buffalo Bills will be back next year, and Nano Dimensions will be back. If from a technical analysis perspective, we had the monster run in 2021, hit highs of almost $18 per share. Right now, we're trading at $3.60. So just from looking at the chart, we can see that we're coming into some technical support on the chart, which in itself could be a buy indicator. But that's not why I'm extremely interested in buying and getting exposure to Nano Dimensions. If we go look at the technicals, if we go look at the fundamentals, the fundamentals and the amount of cash that this company has on the books is absolutely stupid. They got a stupid amount of cash compared to where the stock's trading at. All right, so we're trading at $3.59 per share, but we have cash of $5.79 per share on the books. So every share that you buy from just a cash per share perspective, you're making over $2 per share just by buying it. You're making over $2 per share by buying a $3.59 stock. That is unheard of. And a lot of investors are saying, well, their burn rate is extremely high, and that's not true. They only spent $20 million in 2021, and the market sold off, growth stocks sold off, and that's why NNDM has fell off. But it will rebound. It will get back, in my opinion, at least to $5.79 towards that $6 area. That $6 area is going to act as a magnet. And if we go back to the chart, just to move back up to $6 is what? A 40-50% move. Just to move back up here to $6. And that's nothing compared to the moves that we have seen NNDM put in the past. Look at this move. Do you think it can make a move like that in 2022? I do, absolutely. I think it could do one of these. Find a base down here at this prior area of support, round back out, boom, and retest $8 or $9 per share, giving us more than a 2x move or a 100% move in 2022, making it one of my top stocks of 2022, hands down. Stock number 3 is not even a stock at all. It's actually a crypto, and that is Ethereum. It is of my opinion that Ethereum will overtake Bitcoin as the top valued cryptocurrency in the world. It will overtake Bitcoin. You heard it here first on Touchdown Trades, and here's why. Number 1, it's just better. It's just overall better. Number 2, NFTs are using Ethereum, and everything uses Ethereum. It's more functional than Bitcoin. NFTs are going to take over the world, not in the form that you think, not the collectibles, not the crypto punks or the crypto skulls or the Bored Apes, not the collectibles. Although I like those and I think they're cool. We're talking about a whole new level of NFTs, talking about smart contracts, that type of thing. And Ethereum powers all of that stuff. It is going to be in high demand. Demand moves price, and the price of Ethereum is off of its all-time highs by a considerable amount. We have all-time highs up here at 4,800. Right now, we're trading at 2,600. So we have a $2,000 pop back towards all-time highs. Ethereum is a steal at this price point, in my opinion. Right now, Bitcoin is powering the market, right? If Bitcoin goes up, the overall direction of most cryptocurrencies go up. If Bitcoin is selling off, then the overall direction of the crypto markets is usually selling off. However, I do think Ethereum will slowly disconnect from the kind of like the tether or the correlation that we have seen with Bitcoin. I think Ethereum will disconnect from Bitcoin in the next year or two. Right now, Ethereum has a market cap of $310 billion. Bitcoin, $692 billion. All right, so I do think Ethereum overtakes Bitcoin, becomes the #1 cryptocurrency in the world. May not happen in 2022, and even if it doesn't happen, I still think it's a really good deal in 2022. So I do think we see a 20, 30, even 50, 60% return from Ethereum in 2022. All right, so those are my top 2 stocks to buy in 2022, and my top crypto is Ethereum. All 3 of them are setting up for really nice moves in 2022. I love all of you guys. I'll catch you in the next video. If you're new around here, hit that subscribe button, turn on the notification bells, and everybody go destroy the like button. If you want some free money, check out the links in the description. I love all of you guys, and I'll catch you in the next one. Until next time, deuces.